Hey, it's Mac with PriceActionTradingSystem.com, and it's Tuesday. It's January 23rd, and today's just a range day. After the strong move up we've had, it's not uncommon to see a consolidation day like this. This is considered a correction. Doesn't mean that we still couldn't, tomorrow sell off a little bit, but this is still a correction. So we may pick up tomorrow and take off again. But this is just a consolidation day where the market's trying to take a little bit of a breather and catch up. Um, there's two tiers here that you had early on. If you measure this first one, uh, if you just find the midpoint between these highs and lows, you can kind of usually look and see where the midpoint is, where the support and resistance is. You're finding most of your resistance and most of your support, and that's right across here. And if you measure that, looks for a target right in there. You can see that. And we ended up getting a little bit of a breakout up here. Where you got to be careful is when it gets in this tight stuff, like right in here, right in here. You just get whipsawed in some of that stuff. So you got to be real careful with it. Keep that in mind. But let's talk about the trades. Excuse me, I may have to take a swallow of my drink occasionally. My throat starts bothering me here, and it probably will occasionally. So I'm just about over this, but I'm not 100% yet still. So if I start talking, my throat gets a little scratchy here. But anyway, when I came in, we were in this tight congestion right here, and you do get a little failed break lower here, but if you start trying to take these failed second entry longs and shorts and that stuff, you just kind of get whipsawed. And if you did happen to take the failed second entry long here, which actually that's not really a failed second entry long because you got a first entry here and this was the second entry. So if you took it, it would have been right here. And I'd really want to wait on a second entry, which doesn't come till here. That bar is too bullish. This bar is way too low. And then by the time you get this failure up here, then, you can tell you're going sideways. You do get a little failed break lower here, and you might consider that, but again, I think you're better off to wait and see if you get a breakout pullback to prove you're making higher highs and higher lows. And notice if you draw your trend line off those first two swings, you get your failed second entry short right here, and it bounces right off that trend line, a nice bullish bar right off the EMA. That's where you want to go long. And it does take off, and you did make a lower low right here. So this actually confirmed the trend line on the third touch, and then you got a failed second entry short here. And so I like going long right there above that bar. Again, it's off the trend line, the key entry point, and look at it take off again. Generally, I would tell you want to wait on a lower high here off these highs, but you got a double top right at the measured distance from this midline and this low, and you've reached that, and you got a big bearish bar, and look how far away you are from the EMA. Look how long you've been away from the EMA. This one, I mean, like I said, you could argue for this to be green, but I like this setup, and I'm probably going to take this most times. And if you didn't get in here, then you didn't get any of this. It's just hard. This is what really trips people up. They won't get in here and they'll wait on a higher low, which is doing the right thing. But then it takes off and they don't get a setup and they say, man, I should have entered that. And they beat themselves up about it. But the good thing is if you follow the rules and you miss a good move like this, you did the right thing, because next time you'll try to get in there, and just assume you try to do that right here. Of course, this doesn't quite look like that, but assume you try to do it right here, and you would have gotten burned because it pushed up one more time and then turns down. So that's why you want to wait on the lower high in most cases to prove that the move up is played out and has lost momentum, and it doesn't really prove that until you've made a lower high. And so, but sometimes by being aggressive, if you want to be a little aggressive, that's when you catch moves like this. Because if you don't get in there, you don't get another chance to catch that. And you don't want to be trying to drop in below any of these other bars, because that's just disaster waiting to happen. And so don't try that. If you didn't enter here, then you got to watch it go. And notice you get a second entry short right here. This is really your signal bar, but so your stop has to go above that. But notice that's a new high. It's a first entry long, pull back second entry long. It's a second entry short, counting off the low, pull back first entry, second entry. So I like entering. You can actually enter below that bar, but your stop has to go above the swing high, which is right there. So I like that one, and it gets just enough to get out, and it reverses. So this is why we only go for 4 ticks. For some reason, that's the sweet point, the sweet spot. If you try to go for 5, 6, you'll get a lot of times you would have gotten burned right here. But if you go for whatever reason, 4 seems to be the magic number, and that's why we scalp for 4 ticks. So don't try to, trust me, we've got this down to a science. We perfected it. Don't try to change it, because we've already tried all that. So we've already been through all the learning process for you. Go for 4 ticks unless you're trying to swing trade. Now, if you're trying to get in these entries and get a swing trade, then that's totally different. But if you're scalping, go for 4 ticks, because you're going to get a bunch of them that that'll get just that 4, but they won't get 1 tick more. And you'll get burned more times than you would have gotten burned here. And there's a couple others you would have gotten burned on today probably. So don't, 4 ticks is what we go for. That's what you got to get, and don't go for 1 tick more. So when this goes down, even though this got its 4 ticks and it was enough to get a scalp, we still consider that a failure when it turns back up right there, because you would expect this to make a new low. You do get a higher low right here with a fairly nice bullish bar, kind of a reversal type bar. But you're still making lower highs here, and so I would want this thing to get through the EMA and then come back and test it. And it does that right here. And notice that confirms that trend line right up through there. If this trend line, you draw it right off those highs right there and drag it down here, and it bounces perfect right there. You can see that. I like going long right there. It is a second entry. Notice the eye, pull back first entry, pull back second entry. It's not a perfect second entry, but it's still a second entry. There's another lower high here, but you're going sideways, so I don't think you want to risk that one. If it would have broke lower, maybe. It is a key entry point. It is coming off the EMA and the trend line, so there's some reasons. So you might consider that one. But I don't really, and once we started going higher here, I would be looking for a measured move. There's your first leg up, and your measured move over here. And it is a perfect to the tick measured move. I mean, that's perfect. So that would have been my target, to ride either one of these out if I had a runner. You definitely would have got a runner here. You probably wouldn't have had one here. It does come back again right here and gives you a failed second entry short. So again, you might have considered entering here, but this is kind of a screwy bar. It actually went higher, then turns, it goes lower, and then ends up closing lower. So it was kind of hard to trade that bar. So you really would have had to go long way up here probably to break above this bar, unless you entered when it turned back up here. So that's just a really hard bar to get in on. And we'll make it green, but I think you're better off to skip it. It does come back again, but then it rockets off, and you just really don't get a chance to enter this before it's made its measure move. And again, after a to the tick measured move being that far away with that big of a runaway, we're overdue to come back to the EMA again. And this is kind of a repeat. Notice this pattern looks very similar to what happened over here at the last. You get this big runaway. Get the big runaway. We did get one more push up here. I like that just as a repeat pattern, a measured move on a bigger entry. There's 2 legs up. It's a second entry on a much larger pattern. Again, you're usually better off to wait on the lower high, but notice you don't get one till you get right down in here and start going sideways. And so if you didn't enter here, just like here, you probably don't get an entry. We do get one more chance here. Notice it's working down, and it does come back to the EMA again with a big bearish bar. I like entering there just simply because this was a failed break out of the range, and I really thought we'd come back to the midline. We never get back there. It just kind of makes a higher low support area across there. But again, you would have got enough to get out of here. I think you had a tick or two to spare maybe on that one. And then we just start going sideways. And again, this is where you got to be careful because this is where you get whipsawed. Failed second entry long, failed second entry short, failed second entry long, and you just get whipsawed. Wait on the breakout. You do get a failed break lower here. You got to close outside and move to a new low. But that's such a neutral bar. You know, it's very neutral. Again, you could argue for it because it is a failed break lower. It is the second entry long. Notice that's a double top, so new high, pullback first entry, pullback second entry. Then you get a failed break out the upper side. I like this one better. You got a big bearish bar. Again, you get just enough to get out and it reverses. And notice here you got that new low, first entry short, second entry short, but you have the breakout too, so it's a breakout pullback long as well on a failed second entry short. That probably means you're going higher, and at the very least, I would measure that leg and look for a possible measured leg, and so you got plenty of room. You actually go a few ticks higher than that, and so I like that one. And then that was it. I just didn't see anything else I liked the rest of the day. Again, you're getting a little bit away from the EMA here. Fairly bearish bar, but you're not back up to the highs yet. You don't have a failed break above, you don't have that. Anytime you have that failed break above a new high or a failed break below a new low on a range type day, those can be fairly good entries, but you don't have that here. You've already had your break out of this range right here, and we've already broken out of this top of this main range, so this is just kind of no man's land where I would just kind of watch. It does come back down here and make another low, but again, there's no close outside this trend line, nothing like that. You're just going sideways here, and it's so late in the day. I just don't see any good entries there, so I think there's nothing out there that I like that I would risk entering that time of day. So quite a few entries today. These, again, you could argue for these. These are all real close to being blue going up through here because you're looking for that measured move. You're looking for prices to at least get back up here to the highs. Generally, I would really like these on a runaway trend day, but that's not what you have today. This is a range day. And so these are more suspect on a range day. Your higher probabilities are always going to be the shorts off the very highs. And that could be the one argument you make on both of these. You notice either one of those would have worked because you're shorting off the highs of the day on a range day. That's what you want to do. This one especially because you got a fairly bearish bar. You don't really get a good setup over here. You might argue for this one to be green right here. I'm not going to make it red simply for the reasons I've already talked about, but you could probably argue for it to be green. And then, of course, if it wasn't late in the day, look how we're starting to make lower highs down through here. That's a big bearish bar, big bearish bar, big bear. You could have taken any of those if it wasn't after 2 o'clock. So, and we're coming off the highs after a double test. So there's also a double test of this high. So that's a reason to consider going short on any of those and trying to ride it back down. But it's after 2 o'clock, so I just want to point it out. But anyway, not a bad trading day. These kind of days some people struggle with. Just remember on range days, most of your best entries are going to be off the lows or off the highs. You got to short the moves higher and buy the moves lower. And that's the key. If you try buying up in here, you get burned. And if you try selling down at the lows, you get burned. And that's what so many people struggle with. And where you really have to be careful is in the middle of things, because you just kind of get, the market's undecided and it gets whipsawed. You get whipsawed in there. Just find the extremes and sell the extreme highs and buy the extreme lows, and you'll you'll come out a lot better off on these kind of days. So anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.